All right, today we're going to put together a user's guide for mutual funds. We're going beyond just the how to buy and diving deep into all the essential services that come after you invest. Think of this as your personal roadmap to managing your money like a pro.
So you did it. You did the research, you picked a fund, and you put your money in. But now what? It's a question a lot of people have. What can you actually do with your investment now? How do you tweak it, automate it, and, eventually get your money back? Well, that's exactly what we're about to cover. Here's our game plan. We're going to follow the entire journey of an investor in 5 simple steps. First, we'll see how a fund even gets started. Then, we'll look at how to put your investing on autopilot. After that, we'll get into the rules that keep everything fair, a little bit of account housekeeping, and finally, the big one, how to access your money. Okay, let's start right at the beginning. Before you can invest in a fund, that fund has to exist, right? Well, every single mutual fund starts its life with something called a new fund offer, or an NFO. This is pretty much your first chance to get in on the ground floor. Launching a new fund isn't just a random event. It's a really structured process. First, the asset management company, the AMC, comes up with the idea for a new scheme. Then they have to file a mountain of paperwork with the regulator, SEBI, to get it approved. Once they get the green light, they announce the NFO dates. That's your window to apply. After that period closes, the AMC officially allots the units to all the new investors. And just like that, the fund is born. So when you go to invest, you'll hit a fork in the road, a direct plan or a regular plan. And honestly, the big difference boils down to 2 things: how you buy it and what it costs you. With a direct plan, you go straight to the source, the fund house itself. Because you're cutting out the middleman, you pay a lower annual fee, which is called the expense ratio. With a regular plan, you're going through a distributor or an advisor. They get a commission, which is baked into a slightly higher expense ratio. Which one's for you? It really just depends on if you're a do-it-yourself investor or if you'd rather have some guidance. Investing doesn't have to be this thing you stress about and manually do every single month. Mutual funds have some amazing tools that let you automate your entire strategy. It's the best way to build discipline without even thinking about it. Let's look at how to put your plan on cruise control. And this, right here, this is your automation toolkit. Let's break them down. First up is the SIP, the Systematic Investment Plan. This is your wealth-building machine. You just set a fixed amount to invest every month, and it happens automatically. Then there's the SWP, the Systematic Withdrawal Plan. It's the exact opposite. It's perfect for retirement, letting you pull out a fixed amount of cash regularly. And finally, the STP, or Systematic Transfer Plan. This one's a bit more advanced. It lets you automatically shift money between 2 funds from the same fund house. Super useful for managing risk and rebalancing your portfolio over time. All right, so we've got our investments on cruise control. But like any highway, there are rules of the road. And in the world of mutual funds, the most important rules are about making sure everyone gets a fair price. This all comes down to 2 little things: NAV and cutoff times. So what is NAV? The easiest way to think about it is just the price tag on one single unit of a mutual fund. Every day after the stock market closes, the fund adds up the value of all its investments, subtracts its daily costs, and then divides that big number by the total number of units out there. That simple math gives you the net asset value, or NAV, for that day. Right, so which price do you actually get? Well, it all comes down to timing. For most funds, like equity and debt funds, the magic time is 3 p.m. If you get your buy or sell request in before 3 p.m., you get that same day's NAV. Miss that deadline by even a minute, and you're bumped to the next business day's price. So yeah, timing matters. Now, for other types of funds, like liquid funds, the timing is different, so it's always a good idea to just double-check the cutoff for whatever fund you're dealing with. Okay, let's talk about the life admin side of investing. It's not the most exciting part, I get it, but it's absolutely crucial. Your investment account holds a lot more than just your money. It's got personal info that needs to be right. And the good news is you're in the driver's seat here. You can do all sorts of things, like updating your address if you move, or changing the bank account your money goes to and from. You can also appoint a nominee. That's the person who would inherit your investment, which is super important. You can even use your fund units as collateral to get a loan, or switch from old-school physical certificates to a modern digital DMAT form. These are the little things that keep your investment life running smoothly. And here we are, the final step, the one everyone wants to know about. How do you actually get your money out when you need it? In the biz, this is called redemption. Getting your money back is actually pretty simple. It's designed that way. All you do is put in a request. either online with a few clicks or with a physical form. And just like when you buy, you have to get that request in before the cutoff time to lock in that day's NAV. The fund house then repurchases your units at that price, and boom, the money is on its way to your registered bank account. And you don't have to worry about how that money gets to you. This isn't some check lost in the mail. It's all done through secure, established banking channels like NEFT or RTGS. It's a direct, safe transfer that ensures the money from your investment lands right where it's supposed to, in your bank account. So when you hear about all these things, SIPs, SWPs, nominations, redemptions, don't let your eyes glaze over. They're not chores. They're not complicated jargon. They are literally your personal toolkit. Each one of these services gives you more control, more flexibility, and way more confidence to manage your own money. Look, knowing about these services is what turns you from just a passenger into the actual pilot of your own financial future. So the real question isn't just if you'll invest, it's how you're going to use these tools to make your money work harder for you. Are you finally going to set up that SIP? Or maybe it's time to update your nominee and protect your family. Whatever it is, you've now got the guide. You're ready to make your next move.